Hi all, I'm just going to give you a few seconds to enter the room and we'll get this webinar underway. Just bear with me. Okay. Oh, good evening, Noel. Good evening. Oh, sorry, Phil. Okay, so look, a very good morning to those who've joined today or evening from wherever you're, joining us from. A big thank you for taking the time out of your busy schedules to be with us. It's great to be back with you guys again. So look, quite a few traders have requested the webinar on the. Let me just check. I am sharing the screen. The Quasimodo formation. For me, it's a really great way to extend support and resistance in the market in a reliable fashion. And it's reasonably objective once you understand the way to apply it to the market. So, and this is something I use on a daily basis in my own markets analysis. So, look, I see the chat box is relatively okay. We have a. So I'm not sure if you guys can see this. We have a comment from Michael. Just bear in mind that you have someone here whose only knowledge of Quasimodo is from the Hunchback of Notre Dame. You'll like my slide. I have a slide on with his handsome face on it soon. So I will go slowly. No worries, guys. No worries. Morning, Tim. Hi, Bevan. Okay, so look, let's get this underway. So look, for those of you who are unaware, my name's Aaron Hill, and I'm the technical analyst for FP Markets. Now, I've been involved in the financial markets for more than 12 years now. I started at the ripe old age of 23. So, yeah, so and I remain passionate to this day. So it's certainly something that's it's certainly a passion of mine. In particular, price action, Fibonacci, and the relative strength index. Now, for price action, the Quasimodo formation really does fall under that umbrella, in my opinion. So, as I said, the chat box is relatively empty, so I assume I'm coming across loud and clear, and the welcome slide is nice and is clear. Right. So, if not. If not, do let me know, and the support team will try and get you up and running. As usual, guys, look, a recording will be available of this presentation, and that can be, thank you, RY, thanks for confirming that, excellent. A recording will be available through the usual routes. That is the FP Markets main website that you can find on the main tab under resources. You'll find the archived webinars placed there. You can also look for ease, shoot over to our YouTube channel, the FP Markets YouTube channel. We have all of our webinars recorded there. And for me, that's the easiest way. But look, on the main FP Markets website, you have access to all the upcoming webinars in various different languages and information on all of the presenters, their trading background and all that good stuff. And just to make life that little bit easier, FP Market Support send all attendees an email on how to view the recording shortly after the presentation ends. All right. Okay, so look, as you can see on the screen, we have to quickly run through the disclaimer. I'm not going to read all of the text, but look, the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. Look, guys, what all this is really saying is, today's presentation is for educational use. It is not in any way, shape, or form direct investment advice. So please do take that as such. Right. So as for a Q&A or any questions I miss, I can see quite a few questions coming across from this, I believe, because it is a truly tremendous way of plotting support and resistance. If I miss any questions or you're unclear, please do email me at marketsanalyst@fpmarkets.com, or alternatively, shoot an email to our support team at support@fpmarkets.com, which you can see in the chat box, guys. Sorry, you can see my Market Analyst fpmarkets.com email, but the support email will be up shortly. There we go, guys. Okay, right. So let's kick this off. Topics for today. Right. So what is a Quasimodo pattern? Here, what I'll do is I'll address what a Quasimodo pattern is. Now, guys, just to save me some talking time, Quasimodo now will be referred to as QM going forward. It's just for ease. But we all know what that means. Okay, so look, I will not go into specifics about regarding the QM, but I will leave you with a clear picture of the pattern and talk about why I believe it is called a QM. However, there's a couple of other labels associated with the structure, which I will underline in a moment. And just to be clear, just to be crystal clear, I am not talking about the Disney Hunchback of Notre Dame here, Quasimodo. I will show you that very, very shortly as to why not. So many will also find similarities with the QM and the widely traded head and shoulders pattern. However, there are some clear differences that I will touch on shortly. So how to correctly apply the Quasimodo pattern? Look, as the title implies, I'll demonstrate a simple to use approach to correctly apply the QM formation to the charts. This for me, works well both with both bar charts and also candlestick charts. Though I really do feel it would work with other chart types too. However, for this presentation, I will be sticking with the candlestick charts. Using the Quasimodo pattern in trading, this is what we're really all here for, I imagine. How do we use this information to find points of, shall we say, interest on the charts? So yes, it will be at this point, I will bring the QM together and show some of the ways we can use this in trading, including entries and possible exits. And finally, of course, as you can see, a Q&A. Look, as I said, newer traders, please feel free to step forward at this point. There are no silly questions. And this is the whole point of webinars, really, to form an interaction. So yeah, as I said, please feel free to step forward at that point. And there we go. There's the man himself, Quasimodo. Right. So here we go. So the first slide shows the QM pattern in all its artistic beauty, right? So in drawn form, right? So we have the bearish Quasimodo pattern at this point and the bullish Quasimodo pattern to the right. And what this is a pattern that's composed of 5 legs. So we have the initial leg 1, initial leg 2, 3, 4, and 5, okay? Now the QM is not one of the most popular patterns to be traded in the financial markets, especially amongst technicians. But it is, as far as I've seen, and the number of back tests I've done on the pattern, and it's one of the most reliable and powerful ways of applying support and resistance to your charts. Some years ago, I actually did conduct a reasonably thorough back test with no other technical tools supporting the pattern, and found it gave between a 50 to 55% win-loss ratio with an average an average risk to reward of up to 2R, an average, that is, so 2 times the risk. Now, of course, this will be different, right? So for other traders, as take profit targets and stop loss placement will of course vary. Some will be fine holding a position, right? Holding a short position at this point and following the trend. In that case, what you'll do is you'll have a higher win risk reward, but probably a lower win ratio. So it all depends on how you approach trade management, in my opinion. Okay, so let me just start by saying the QM pattern is considered a reversal signal. So it's a reversal formation. That is a configuration that forecasts points on the chart in which a currency pair, assuming we're talking about FX here, could reverse direction. Look, guys, although it's formation, I can remember when just to give you a comparison, I can remember when I first began looking at harmonic trading, you know, the AB equals CD, the bat pattern. And I was really discouraged with it for quite some time. I just thought it was too complex for me. And I really felt I didn't have the time to really learn it. I'm thankful I did though. But this may seem a complex pattern, but once you understand the basics, your whole vision of the charts will change in terms of support and resistance. This is one of the primary ways I look for support and resistance in the market. One of the primary ways. Okay, there will be some traders that say it don't work. Well, good for them. That's what I say. I know it works, and yes. So, but it's up to you to prove that. It's up to you to prove that how whether it will fit into your trading strategy and your trading plan. So look, why is it called a Quasimodo? Now, where did the name come from? Just to be clear, the QM has attracted other labels over the years, including what's known as the over and under pattern, or simply fake out or fake out formation. Now, look, for why Quasimodo? Why? So I believe, I'm not sure, you know, I believe the name originated from this handsome young fella here. This is the fictional character Quasimodo, from the novel, I think, The Hunchback of Notre Dame. I guess you can see some similarities with his hunchback there, and this is the head and the right shoulder. I'm not sure totally, but you know, I always do call it a Quasimodo pattern because I'm just so used to it now. But for me, really, all this is a fake out pattern. It's a fake out. Here is the fake out point here, and here is the fake out point here. So for anyone that's familiar with bull and bear traps, this is a bull trap here because it traps the bull, traps the breakout buyers here, and traps the breakout sellers here. So all this is a fake out pattern. You can label it whatever you like. You can label it Quasimodo, Super Quasimodo. You can label it whatever you like. As long as it works, it doesn't matter what you label it, in my humble opinion. I think that's really all I can offer you here. I'm going to go into more detail, but look, just to reiterate what I've said, the Quasimodo pattern is based on 1, 2, 3, 4, 5 legs. Okay, let's remember that going forward. We have a question from Mark. Is the third leg always high or lower than the second leg, depending on is the third leg always higher or lower than the second leg? Yes, I believe it is, depending on the bear. So the third leg is always higher than the second leg. Yes, so the second leg is at this point here. Don't worry, Mark, I am going to go into more detail shortly. This is only a brief introduction, really. But the third leg, yes, is always higher on the bearish, and the third leg is always lower on the bullish Quasimodo pattern. Right, okay, let me clear those drawings. And let's move across. Okay, the application of the Quasimodo pattern. Here I'll go. So how do we apply? So how do we really apply this this pattern? So right here now, as you can remember from the previous slide, we're now looking at a bearish Quasimodo pattern. Whoa, sorry about this. Okay, we're looking at a bearish Quasimodo pattern. So the next one is the application of the Quasimodo pattern. Right. There's also some psychology behind this, which I think is important to understand. So to demonstrate, I'll first look at the bearish Quasimodo pattern, which we've just recently briefly looked at. And then we'll switch over to the live charts and show you more some of the patterns that are potentially brewing. Yeah, we'll work from there. Any questions, and I'll answer them live on the charts. So to begin with, to be a valid bearish Quasimodo pattern, we require some form of uptrend, right? So as you can see here, look, this doesn't have to be a monstrous uptrend, right? So I'm not saying we have to be in the, just the dollar yen of uptrends. Look at the dollar yen right now. We do not have to be in that type of environment for a bearish Quasimodo pattern to emerge, but we do have to have some form of up move present. I might add, but in the case, we should see some relatively, a series of higher highs, higher lows, higher highs, higher lows. We should see some form of up move, as you can see at this point. So movement within an uptrend. Movement within an uptrend, of course, will attract breakout buyers, trend traders, and obviously contrarian traders. Now, look, breakout traders will buy the breaks of these. Let me just get the pen up. Breakout traders in an uptrend, so breakout buyers will be buying these points here. Okay, they'll be buying the breakout of the previous higher highs. Most of us know this, I assume, so I won't labor on this point too much. And trend traders, what they do is they buy the dips, right? So they're dip buyers, if you will. So they're buying the dips within the trend, okay? So buyers will come in here and buyers will come in here. So breakout buyers, dip buyers. And contrarian traders, so these are those traders who establish positions that are contrary to present market sentiment and therefore attempt to fade the action from areas of resistance. And what you'll do is you'll often find that there will be resistance at this point that made price pull back, reverse at this point. So you'll often see contrarian sellers attempting to come in at this point. Look, basic 101 stuff within a trend, right? So you'll often see sellers trying to come in here, and so that there'll be a battle. You'll see buyers and sellers square off at this point. So with that being said, so at this point here, when we see the market retrace, right? So this is I'm just trying to think of the best way I can clearly explain this without confusing people. I'm just trying to think. Sorry, guys, just bear with me. So yes, we're all clear. Just let me know, guys. We're all clear on the basic trend functions. We've got breakout buyers here, dip buyers coming in here, and obviously contrarian traders coming in at this point. If we're all clear on that, I can then move on to the overall formation. Now, as you can see here, if we go right up to the Quasimodo point, leg one, okay, leg one is very similar to these legs here, right? So it's nothing different. At this point, all we've got is another leg in the uptrend. We do not know anything else at this point. Price stops at this point, presumably because there's another resistance at this point here. And at point 2, we see another retracement within the trend. Again, guys, look, the arrow, dip buyers are coming in at this point. Dip buyers are looking to come in at this point. Fair enough. Okay, we all understand that. Dip buyers coming in, contrarian traders coming in at this point, and potentially at this point here. What happens though is price breaks above this area. So we're on leg 3 now. As price continues higher, okay, we're on leg 3. And what happens is we break above the previous high, as we did at these points and these points. Nothing new. At this point, we do not know anything. We do not know if we have a bearish Quasimodo pattern in play. So at leg 3, we do not know anything. It's only when we form this head at this point and leg 4 takes shape and breaks below the previous higher low at that was formed by legs 2 and 3. So once we break below that higher low, that is when we know that we have a potential bearish Quasimodo pattern, because what we've done is we've had a fake out. We have trapped. Can you imagine how many traders are trapped at this point? How much pain is being seen in the markets? I hope you can understand that, because what happens is you'll have breakout buyers coming in here with their buy stops just above the area at this point here. So you'll have breakout buy stops there. You'll also have buy stops from those attempting to sell at this point, right? Because remember, we do have contrarian traders coming into the market. We also have resistance at this point here. So you're going to have sellers coming in with all these, with buy stops just above the area. So once we've clicked above here, and then we come down, we've formed what's known as a bull trap. We've trapped all of those breakout buyers in that market. And what's happened is that we've also trapped those looking to short at this point here. What happened? How many times have you been in a trade where you sell at a point, price rallies through that resistance, taps your orders, taps your stop orders, and you blame everyone, the broker, anyone on a forum, you blame anyone but yourself. And I found that was very common for me. I didn't really want to take responsibility for my trades, but all this was a bull trap. You were trapped within this area. Okay, this is so common. This is so common around round numbers, especially psychological numbers as well. So what happens is leg 4 comes down. So the sellers here are kicking themselves, right? They've been stopped out, but price then rolls over and trades in the direction that they initially planned for. So there's a lot of pain with bull traps. Okay, leg 4, we're down. We've broken the higher low. At this point, price could obviously continue lower, right? If that's the case, I tend to leave the idea that we have a potential bearish Quasimodo pattern, because it's just too far. But it does work on occasions, and I'll show you why. Okay, let's get rid of that part there. Let's imagine on leg 5 does form and we get a retracement. Now, we get a retracement and 0.5, the leg 5 forms. What you'll find is if you extend a horizontal level from the left shoulder through all of this mess, you'll find that there are often unfilled sell orders at this point as traders attempt to join in the selling momentum at this point. So what you're doing is once price retraces, it fills all of this gap here and then often sells off from this point at the left shoulder. So you're looking for the left shoulder here, extending that red line across all of this mess and to this point here. So it's at this point, it's a definite level in the market, right? It's a defined level in the market. It is only once price tests the QM left shoulder do we know we have possible resistance, right? So it tests the area there. Do we know we have possible resistance? So look, with a brief layout of the psychology forming the bearish Quasimodo formation, which is exactly the same for the bullish QM, guys. It's nothing different. It's just reverse. We can clearly see we need 5 legs, right? I hope we're clear on this. 5 legs. 1, 2, 3, 4, 5. Nothing complicated there. Just to reiterate, leg 1 forms the bullish wave within the uptrend, followed by a dip at point 2 and the subsequent rally at point 3. Leg 4 forms the lower low at this point here, as you can see. And then leg 5 pencils in the pullback, which brings us up to the left shoulder QM, namely a pullback, right? So if I move this. Okay, we have a question. Is any relationship between 3, 7, leg 5, 2, and 4? There's no leg 7 there. I'm afraid. I'm not sure what that question refers to. Oh, 3 and 5. Okay. Is there a relationship between 3 and 5? I'm still not sure what the question is. I'm sorry, I don't understand. Tim, is there a specific time frame this works best on? I'll get to that very shortly. We're going to look at the charts in a minute. But look, guys, the main thing I really want you to be sure is that you understand that understand the basic structure. If you do not, let me know now before we move on, and I'll clear those up for you. Look, the question regarding is there a relationship between legs 3 and 5? I'm not too sure how to answer that. I cannot think of an answer. I'm terribly sorry. Between 3 and 5, the only relationship I know is within the overall formation here. So yes, right. So let me just briefly move on. Okay. Now this is something I get asked a lot. You know, what's the difference between a QM and a head and shoulders pattern? They look very similar, right? They look very similar, but there are some clear differences, right? So as shown on the slide, a head and shoulder requires 3 definite peaks. Now, this is not a webinar on head and shoulders. I'm sure most of us are aware of what a head and shoulders is. Let me just pen. So look, 3 defined peaks: the left shoulder, the head, and the right shoulder, which is something the QM does not have. You know, I'll explain why in it does, but you're in the market a lot earlier with this formation than you are with the head and shoulders top pattern. So the right shoulder is something that the QM does not require to have a valid pattern. All the QM top requires, the bearish Quasimodo pattern requires, is a left shoulder at this point here, between point 1 and 2, the head, which as we know now is the bull trap, and a lower low, right? So at point 4, do you remember we broke that low at that point there? And that's it. That's all we require for the QM top over the head and shoulders. Now, another difference between the two patterns, of course, is the neckline. So we have a neckline with the head and shoulders top pattern, which is joined from the troughs made up between the head, right? So, and then we join the neckline, join the 2 troughs together to form a neckline. And when we break this neckline, we have a bearish signal. But so if you're going to compare these two patterns, what you would have here is you would have to wait for this right shoulder to form. But then look, because we require a lower low with the bearish Quasimodo pattern, you know, your neckline is going to be in a very unfavorable position, because price is going to have to continue all the way down here, right? Before we get our entry signal. So it's just not viable. That's the main difference for me between the two patterns. Whereas on the head and shoulders, we either want them to be horizontal or ascending to get us in as early as possible. You know, and look, just to clear this up, by the time we form the right, this is our entry. This is our entry for the bearish QM. But at that point, you would have to be rather aggressive to enter on the right shoulder for the head and shoulders. This is our confirmed entry for the QM. Okay, so we're in the market a lot quicker with the bearish QM. Let me just see. Okay, so we have a question: how to determine TP in QM pattern? So there's no traditional take profit objectives with the QM. It's just, it comes down to your experience. I'll show you how I look at things, and maybe you can take something from that. But it's not like the head and shoulders pattern where you take the distance between the head and the neckline and then extend this by the range from the neckline breakout point. It's not the same as that. So there's not a traditional take profit objective for the QM. Right. Okay. Okay. So look, let me just get a bit of water. So using the Quasimodo pattern in trading, this is where I'll start to bring in the charts. And so look, I really thought, instead of going over countless slides and things like that. It just would be good to move over to the more live chart. So look, please feel free to send over any chart symbols you want me to check out for QM studies. If you have something you're looking at while you're listening to this presentation, please do send over your symbol, and I'll pull it up and we can have a look. Here I can also talk about stops and obviously entry. And also you'll see, I don't only use the Quasimodo pattern, I use other forms of technical analysis to base my trading decisions and direction. Also, there is the concept of QM support turned resistance and resistance turned support. Just like when you break a resistance level, it often becomes support. It's the same for the QM, exactly the same. Right. So let me just switch things over to the charts. You'll have to let me know, guys, if my charts are coming across clearly. Just let me know in the chat box just to okay, Mark, I see your pound Aussie dollar. Fantastic, Michael, thank you. Thanks, guys. Right, so we're on the look, Bitcoin doesn't need any introduction at this point. We have been involved in a primary downtrend. It's very clear, and we're now seeing buyers and sellers battle for position around the 20K area. Now, I'm not here to say that whether I think Bitcoin will rally from here or drop from here. But what I am going to show is the Quasimodo. This market has been Quasimodo friendly lately. So, yes, so it's been, as I said, Quasimodo friendly. Look, as you can see, I do use other patterns here as well. But please, if you can, just ignore those for now. So I'm going to kick things off with this pattern here, the Quasimodo pattern at this point. So let me just zoom out. Right here, you can see, I hope you can see this, guys. Just focus on this area here. There we go. Okay, so we have, this is a little bit complex to get started with, but we have a high at this point here, right? Let me remove the arrow. We have a high at this point. Let me zoom right in so we get a good view. Okay, here we go. So we have a high at this point, and then a low at this point, right? I've gone pretty complex with this one. High, low, high, lower low, and then we continue high. Here is the bear trap, guys. That's the bear trap I was talking about. Oh, sorry. No, it was a low. Excuse me, guys. It was a low, high, lower low, and the continuation to the upside. So here is the bear trap. Let me just draw that on the chart so you're all aware of what I'm talking about. So with the Quasimodo, this is a Quasimodo support, a QM support. Leg one, there we go. Leg one is here. We have the low. Leg two is there at this point here. So this is why I thought it would be good to get onto live charts, as it's never the same as pre-drawn slides. And then leg three, the bear trap. Okay, breakout to the downside, breakout to the downside, and then a continuation to the upside. We only have 4 legs present at the moment, but that's because we haven't included all of this, right? The other leg would have been at this point here. So let me just draw that on so we're all clear. Okay, and that's what we have. That's all we have here. It's just going to take your eyes a little bit of time to actually recognize that. I hope you can already see it. So we have the low, the high, the lower low, and the subsequent high movement to the upside. Again, guys, this is right at this point here, the bear trap. Let me get rid of that. Okay, so now let's spin this across. Remember this formation. It's very, it's very tight within the area. Now, the reason I actually applied this to the chart is because it was tucked directly below the 20K area. Now, if you follow the news, if you follow other analysts, you'll note that most of them were saying 20K is the level. 20K is where we're going to stop. 20K this, 20K that. You know, I don't try to make estimations based on what other people are saying. I try to look at the charts and let them tell me and let the charts tell me what to be looking at. So I assumed that there would be some movement around the 20K area. So with that being said, this is the 20K level here. Let me just change the color of this so we're all clear. Let's go orange. So we have, let's move that out of the way. Orange, this is a 20K area. And look, this Quasimodo support, this should not be there, that one. Quasimodo support at 18,099 was tucked just under that level. So what does that tell you? There's going to be a lot of interest around this area. I knew that. I knew that there would be interest around the 20K area. So what I did was find the closest Quasimodo support to fit in with that narrative, because I knew there would be some, I hate that word manipulation, but I believe there would be some whipsaws to the downside to take out any sell stops. Because look, below the 20K area, people are going to get very, very bearish, I believe. And look what happened. We closed below that. And look, this is a typical bear trap as well. This is a bear trap. Below the 20K area, we reacted off of this Quasimodo support at this point, and now we're higher. Now, I'm not saying that Bitcoin is going to continue higher from here. Now, this is the daily time frame, right? But look, we got almost to the pip reaction from that Quasimodo support. Okay, so and what happened is you could have taken a long position based on this, based on the idea that the 20K area was going to highly likely suffer a whipsaw. And you could have taken so what you're doing is you're buying into weakness. You're buying into, I hate that, I do not like this word, but what you're doing is you're buying into pain with the bear trap below that 20K area. I hope this is making sense, guys, because this is how I look at charts on a daily basis. I look for pain on the charts. I look for where traders are going to be trading based on my experience on the charts. And I know they're going to be trading around the 20K area. And I know with the QM support, relatively well hidden. You know, I think it's called recency bias, right? We only focus on what's happening at this point here. So with that being said, I know traders are going to be shorting below here, and they're going to be shorting into an area of what I believe would have been a very painful, and it has been. Look, those breakout sellers here, they've shorted at this point, thinking it's going to continue lower. And what happens is it turns higher. Now, this could only be a short-term trade, right? This can only be a short-term trade. So as for targets, we've bounced off a Quasimodo support, right? As for a target, look above. We have a Quasimodo support term resistance. Now, let me find that on the chart. We have a Quasimodo support at 23,111. So let's go across. And that's this one. Another reasonably hidden one. Look. At this point here, look at this. Why is that a Quasimodo support at this point here? We come higher, high, low, high, lower, low, continuation higher. It's pretty well hidden, guys, but it's certainly there. Okay, high, low, higher, high, lower, low, and subsequent rally to the upside. What happened is, though, these are really key. This is really key, guys. Once those, remember this formation, remember 23,111. Now we scoot to the left. What happens is when those levels break, when those levels suffer a break, they are they offer such a high probability of reacting. And as you can see here, price broke to the downside and reacted to the underside of that area. Can you see that candle there? We broke to the downside, we tested the underside of that level, and we continued lower. So that would have been another shorting opportunity on the price on Bitcoin, okay, from that Quasimodo support term resistance. Now, I must clarify that in order for the level to be activated, if you will, we need to see that low taken out. Okay, I'm not sure if it was in this case, but this is just something to be aware of. Yeah, it was taken out for sure. But yeah, so we could have taken a short on this, and this really does serve as an ideal upside objective, right? At 23.11 from this whipsaw, from this almost manipulation, if you will, of the break below the 20K area. Let me just see. Yes, Mark, no worries. Can you please explain the QM support area again in the BTC chart? Okay, this down here, no worries. Let me just go back. Guys, I hope you are following along with this. This isn't designed. We are going to have a part 2 to this as well. So don't fret too much. I will go into much more detail in part 2 as well. This isn't an inverted, you could call it an inverted Quasimodo pattern. W So you could call it a Quasimodo pattern, of course, an inverted quasi. Why not? It's up to you what you want to call it. I'll just call it a QM support turn resistance, or a resistance turn support. Yes, Michael, in line with the question regarding the QM support from Mark, I'll redraw those lines. So we're looking at this Quasimodo support here, right? Okay. So let me just draw this here. Let me just draw the Quasimodo support. So look, I did say one thing I will clarify is that for a Quasimodo support, you know, it's a reversal function, right? So, but look, because I've been trading these for so long, I can spot these when they're very complex like this. Generally, I said that there needs to be a downside move, right? A bearish trend in play. When you become more complex with this, you don't need this, as you can see here. So I'm just going to draw in the Quasimodo pattern. Bear with me, guys. Okay. And then we have the left shoulder. And this is the bear trap. Right, so what we have here is this formation here. As I said, this is not the textbook, as I was showing on the slides. You know, it pains me when I watch webinars and they're only on slides. You know, I have to show you more complex versions as well. This is one of them. So anyway, we've made a high, okay, and we've made a low. So this is the low point here, okay. I think I explained that wrong in the previous a few minutes ago. Just bear with me. So in this case, we do not have this point here, do we? We do not have the downtrend. We're in an uptrend, right? And we have this is just a very complex version of it. I shouldn't have really started on this. I just thought Bitcoin being so popular at the moment, or not. I just thought it would be a good start. Anyway, so we have the low at this point. So we have the low at this point here. We have the high at this point here, rounding off. Then we have the whipsaw to the downs. Because remember, guys, if you really just think about this, all this is a fake out, nothing more. You know, it really isn't nothing more. You can call it what you want, as I said, but it really is nothing. And here is the fake out. Here is the bear trap. And it's at this point here and the subsequent move higher. So would I have traded when price at this point here? Potentially I would have done because of the 20K area. But look, let me just see if I've answered those. Can you draw the lines on the candlesticks, please, to show the pattern? The first one. Oh, gotcha. Okay, you actually want me to draw the lines on the patterns, right? As I said, this isn't an ideal version. I shouldn't have really started with this one. But look, this is the low at this point. This is the high. So the low, high, and then we have the low coming down. Draw that to the candles. And then we have the subsequent move to the upside. All right, so, and I don't need to install that because that's already there. So we have the low, high, lower low, and subsequent move to the upside. I hope that's clear. Look, let me just go back to, let me go to an easier chart because I think I've just confused people here. I hope you've got that though, Michael. But all it is a low, high, lower low, and higher high. It's a fake out, guys, a fake out. That's all it is. That's all it is. That's all I'm looking for. This is a very complex formation because it's not, you know, your bearish reverse, your bullish reversal here. It's not a reversal function in a sense, is it really? It's more of a continuation. But once you get used to this more and more, you'll start to see these everywhere, and it will really change your mindset towards Quasimodo patterns. Now, let me just. So here we have, this is the euro dollar. I hope you can see this chart, guys. This is more of a basic pattern. As you can see here, I'm going to start over to the left. This is the daily time frame. Look at this. So we have a bearish move lower. We have the low at this point here. Now, look, life is never perfect, right? So initially let me just get rid of this. initially you would have used this low here, right? This is what you would have been looking at. We've got a nice move to the downside. We have a left shoulder, high, bear trap, continuation to the upside. Okay, and you would have drawn your line across here, okay, to react to price. Would I have traded this? Probably not, to be honest, because I just don't know. It's the low, high, lower, low, higher, high. I mean, so I didn't really want to get into this, but let me try and see if I can. So within this bull trap at this point here, you'll usually find what's known as a kink, right? You'll usually find let me see if I can go down to the lower time frames. Where was this? 2007. I don't think I'll be able to. Let me see if I can go down to this. Okay, so we can. Let's see if we got anything there. No, we haven't. So what I'm looking for is, oh, yes, we have. Right, so let's get rid of this. This is your left shoulder. This is the same as on the daily time frame, right? So this is the left shoulder. This is the high. This is the bear trap. And this is the high. So at this point, we have a Quasimodo, right? So let me draw that on for you so we're understanding. We have the leg 1, leg 2, leg 3, leg 4. Remember, we have to form the high, right? We have to break this high. And leg 5. But look, we didn't touch that, level. So I don't think I'm going to have the data to show why it didn't hit that leg. But you can probably see this from here. Now, what I'm encouraging you to do is to look at the Quasimodo at the break. There's always something there, right? And by the way, guys, this isn't cherry picked or anything like that. This is something I've just I found as we're talking right now. So look, there is something here. As you can see there is a kink. So what you're looking for is the demand, or in this case, demand, I guess. You're looking for the kink around that. And now this is what usually reacts. And as you can see, it reacted. So sometimes price doesn't actually go. It's like support and resistance, guys. We do not plot the levels on the charts and hope for a to the pip reaction. Rarely happens. It's the same with QMs. But in this case, we apply a kink, what I call a kink. So it's a kink around the forms around where the bear trap is. So bear trap forms, price rallies, forms the kink, and continues higher. Okay, and then price, after the QM is confirmed by making the higher high, we then trade the return. Quite simple. And look at the move we got from there. Very nice. This is on the H4 as well. Let me just go back to I hope you got that, guys. Any questions, do let me know. Let me just go back to where I moved this. So there was the other one. So once that's out the way, this is the H4 area. Once that's been tapped, if you will, we then move our next Quasimodo formation to here. So we have the low. We have the low, high, lower low, and subsequent rally. But at this point, it doesn't come back to test the area. We just continue higher and higher and higher. So we extend that level all the way across. Just continue it until we come back and see what happens. Okay, and that's what happens once we tested the area. This was in my market analysis before it happened. This isn't just something I've been cherry picking. You can go back to my analysis and you can see that I've pointed this out, because what this was close to, this is the Quasimodo support from all the way back there. This is also close to a Quasimodo resistance turn support from the weekly chart, guys. Now, if I go back to the weekly chart, which is here, let me pull this up. This is the weekly chart, and we're looking at the Quasimodo resistance turn support at 0.298. This goes all the way back to this point here. All right, this left shoulder here. So we have a high, low, higher high, bull trap, continuation lower. What happens is price fails to offer anything here. So with that being said, with a reasonably clear break to the upside, we know that when price returns to this level, we are highly likely going to, so it's this blue line here, guys. We are highly likely to get some form of reaction. We have not tested that yet. But what I really liked about this area, 0298 was it, it just really gave this area of Quasimodo support some backing, if you will. So I look for confluence on multiple time frames. And look, Quasimodo resistance turn support taken from the weekly chart at this point here, along with the Quasimodo support on the daily time frame at 0371, that should be. Okay, so look, I hope. Yes, Mark, yes. So I didn't really want to get into that. That was more for the next presentation, part 2, where I can go into more complex versions. But yes, a QM can trade on 4 legs as well. But with the ones I've just shown here, the more basic ones on the euro dollar, it's 5 legs, right? Because it's kept to the traditional structure. But as you get more experience, you'll find that some QMs, you can really trade them with just 4 legs. You don't need to actually, as long as you have the fake out, that's all you're looking for. That's all you're really looking for. And that's really what I'll be driving home in part 2. Guys, you can be totally honest with me. Have I completely confused you here, or are you understanding what I'm saying, and you feel like you can walk away from here and start looking at the charts and hopefully work with something? We also have something on the pound. I mean, this is a classic one, right? Left shoulder, high, lower low. Look at this bear trap with a pandemic low here at this point. Continuation higher to the pip reaction from this Quasimodo support at 1958. This is a weekly time frame, guys. This is just the pound dollar weekly time frame. So, oh, thank you very much, Michael. I'm not sure if you guys can read this comment. Funny thing is, I actually understood everything. Very rare, so you must have done something right. Oh, that's fantastic. I just thought I was almost talking to myself at the end. I hope it's come across clear. But look, part 2 will hopefully really clear this up. I hope you can see this as well on the weekly time frame. Pretty simple stuff, right? All you're looking for is a fake out. Do not get bogged down with all the forums and things. There's no need for it. There really is no need. All this is a fake out, nothing more. But now there's something on the dollar yen I really wanted to show you. Look at the dollar yen. This is the dollar yen monthly chart. Now, for anyone that follows patterns, you will recognize this as an inverted head and shoulders pattern. Ignore that. What I'm looking at is this left shoulder. I have been looking at the left shoulder. Look, we can all see now, right? Left shoulder. Leg 1, leg 2, leg 3, huge ball trap, right? Leg 4, we make a lower low, right? And we do not return to the area. What happens is we eventually do return to the area and we break it cleanly. There's a clean break. Look at that clean break. What happens? Look, we break the area cleanly and test it. Look how easy that was to trade. And that's on a monthly time frame. All you need to do is go down to the lower time frames and look for an entry within that area. The only problem here is generally, traditionally, you would want to see a break of the head. We've only just got that. But look, once you get more experience with these, you can take these trades when you know that there's a high probability of this area working. The monthly time frame, guys, it's a pretty hefty level. And it's very well hidden. Who's going to be buying there? Who is going to be buying there at this point here? No one. Just look at the monthly time frame. Who is going to be buying at that point there? I know the dollar yen's been rallying. It's on. It's rapid at the moment. I do understand that, but who's going to be buying at this point? There's no clear resistance turn support at this point here. There's nothing other than our QM left shoulder, as far as I can see, in terms of technical price action. Look, guys, that's really all I have. Right, okay. Let me just round things off, guys. As I said, I have thrown quite a lot at you, but I sincerely hope you are able to walk away from here, with something to work with. That was my main aim. I didn't expect everyone to understand everything I've thrown at them. That's what the emails are there for. This is what you can send comments and feedback to, support@fpmarkets.com, or alternatively, look, this is the quickest one, guys, Markets Analyst at fpmarkets.com. Send that and one of the team will get back to you. We welcome comments. We're here to help. And look, the next webinars, of course, we have the Quasimodo Pattern Part 2, and that's at 9 a.m. GMT. And that's on the 30th of June. I would really, really encourage you to come along to that, as I will go into more in-depth analysis of the QM if you're really interested in this type of trading. And what I'll do there is I'll give you a brief recap of what we touched on already, and we'll go through a truckload of chart examples, and we'll touch on the 4-leg version and things like that. Now, look, just to be aware, the 4-leg version is really my version. I've not seen anyone else using this, and if they have, I apologize. I'm not intentionally trying to copy anyone, or it's just something I've seen over the years that I've used the QM. But yes, so in terms of July, we have a number of webinars. We're looking at supply and demand part 2, correlation to improve your trading, and we'll also take a look at back testing as well. Right. Also, look, guys, I'm always available on the on the Telegram channel, FB Markets Telegram channel. You should see a link in the chat box. There we go, guys. Is there going to any we've had sorry, Mark, I've just seen your question. Is there going to be any, I think, webinars on Fibonacci? We have done, I did recently do a webinar, but I believe we are plan to do some more in the future. I did do a webinar. I think it's if you just check out the previous webinars, you'll find the Fibonacci webinars there. You're very welcome, Cherry. You're very welcome. So look, guys, as I said, look, if you want more detailed response, use these emails, guys, and send me an email. I'll get back to you as soon as I possibly can with more detailed analysis if you need. Alternatively, guys, send me your charts and I can have a look. We can discuss charts. I'm open to that. So with that being said, guys, thank you very much for joining. I've enjoyed this. As I said, I'm a very big fan of the QM formation. And it's something, look, guys, if you're interested in the QM, also do consider reading my daily market analysis on the QM pattern. That's available. That's available every day around the New York close. So yeah, do be sure to have a look at that. Okay, guys, thank you very much for your attention and your time. Trade safe, take care, and I'll catch you all on the next session. Thank you very much.